Thank you for joining us. Today, we're excited to bring you a brand new show from the Onramp Media umbrella. Wake Up Call is a weekly show that will be streamed live on LinkedIn every Monday morning. To catch the premiere of each episode, follow Onramp's LinkedIn page and add Wake Up Call events to your calendar. After the live premiere on LinkedIn, we will distribute each episode across Onramp Media's podcast channels and YouTube page. Wake Up Call aims to educate financial professionals on the merits of the Bitcoin investment thesis, how this asset represents both a threat to legacy financial service businesses and an opportunity to differentiate oneself and retain and attract new clients. Hosted by Mark Connors, Onramp's head of global macro strategy, and Rich Kerr, Onramp's president of managed wealth, this show seeks to provide financial professionals the wake-up call they need, prompt them to have an open mind with respect to Bitcoin, rethink their prior assumptions, become more educated on the topic, and learn from others who are already farther down this path. Mark and Rich bring a combined 60-plus years of experience across traditional markets and financial services, and will share their unique perspectives in how their peers and colleagues can approach the realm of Bitcoin. Wake Up Call will feature guests from various backgrounds and industries who will also share their own journeys to Bitcoin and how others can get up to speed. Now, time for the show.
Well, good morning, everybody, and welcome to Onramp's Wake Up Call. I'm Rich Kerr, president of Onramp Managed Wealth, and I'm alongside Mark Connors. Mark, say good morning.
Good morning, everybody. And Rich, thanks for kicking it off in usual wonderful form. Trying to look through what happened maybe over the weekend. You going to give us a little context?
Last week we started off with a bang. No pun intended, with an assassination attempt. This week we've got Joe Biden stepping down, and I'm fascinated, Mark. I'd love your comments.
Well, I think it's such a packed, unprecedented in the last 30 years, at least. You got to go back to Johnson's Great Society, really, to see another president not continuing their term, another person coming in, a candidate being assassination attempt, at least this time. And what we forgot about was CrowdStrike. Planes not taking off, the airspace over the U.S. becoming desolate because of a global glitch. So it's so much going on, we are not able to digest it all. And I think that's one thing that we want to do here on Wake Up Call is just talk about the opportunity in the markets for asset managers, because you can be distracted by what's fast but fleeting, and then what really is the nugget to take away. So hopefully, Rich, with Loren's help today, we can get that done.
Rich, I think you may be on mute.
Yeah, Rich, did you have the leaf blower going in the background? Did you have the leaf blower?
Hey, sorry.
That's what I have.
I've got all sorts of chaos outside the window here, so forgive me. But we do have the distinct privilege today of sitting down and having a conversation with Loren Asmus. And Loren is a chartered financial analyst and chartered alternative investment analyst who is the vice president of investment research at Canterbury Consulting. Canterbury is a $38 billion firm. They focus on high net worth, ultra high net worth, family offices, endowments, and foundations throughout North America. And correct me if I'm wrong, Loren, I think you guys serve clients through Canada, United States, Mexico, maybe another country that I'm forgetting about, but a sizable firm, and one that has done a little bit of work on Bitcoin along the way. And so we're delighted to have you here today as a guest to talk a little bit about how investment advisors, investment professionals might think about Bitcoin, and how you, as a firm at Canterbury, kind of came to your conclusions. And so welcome, Loren. We're thrilled to have you.
No, thank you, Rich. Thank you, Mark. Pleasure being here.
Yeah. Well, maybe let's start off with a two-part question. So how does a large firm, I guess, like Canterbury, arrive at a decision to evaluate an asset like Bitcoin? And then what notable attributes or rationale stood out in developing a Bitcoin thesis for your firm?
No, I mean, it's a good question, Rich. I think even just taking a step back, when we're looking at a new asset class or a new type of investment strategy or whatever it is, We come in with a mindset of having an open mind and having a curiosity to it. And I think you need to have that, especially sitting in a manager research seat, due diligence seat. You need to be able to take in a lot of new information, information maybe you haven't heard before, and then really trying to cast a wide net across a lot of different groups out there, a lot of different thought experts, like yourselves within the Bitcoin space, and question and prod and try to get down to the truth of things. We have a slogan on the research side: question everything. Across, and then we apply that across all of the asset classes that we cover and that we evaluate on behalf of our clients. And so when it comes to Bitcoin and digital assets, for us, it really started doing more work and creating an internal working group, 3-4 years ago. And even before that, on the research side, I predominantly cover credit and fixed income for Canterbury, which includes core bonds down to high yield, down to private credit and hedge fund oriented strategies. And even prior to us formulating an internal group, it was having discussions internally on the research side of, what is this Bitcoin thing? What is digital assets? How could this fit or not fit in a client's portfolio? And so it really started with that curiosity first, and then developed as time went on, and as the asset class grew, into creating an internal working group so we can bring in thought experts like Onramp and others out there to really dig into the asset class and how it may or may not fit for clients. So I know that's a lot there, very high level, but happy to kind of get a little more granular or wherever you both would like to take it.
Yeah, I mean, maybe I'll kind of drill down. So when you think about the merits of Bitcoin, I mean, obviously you guys have developed an opinion, you got curious around it, you developed a thesis, you started thinking about how it fits into the overall portfolio. Ultimately, you're doing due diligence on various ways to access Bitcoin. Maybe highlight some of the things that stood out in your process, as it relates to Bitcoin in particular. Any unique attributes or characteristics that created an aha moment for Canterbury, where you went, oh wow, okay, that's really relevant. Or maybe there's 3, maybe there's 5, I don't know, but I'd love to hear your thoughts there specifically.
Yeah, and I'll just caveat that, opinions across our firm vary and we have really good discussions. And so, my opinion could be different from somebody else's and
Yeah.
our clients too, right? So we have, at the end of the day, we need to be a solutions provider for our clients. And so it's really about us providing good solutions for clients that want to access something like Bitcoin. And so, yes, we have opinions, we develop theses, but at the end of the day, we want to be open to a lot of different ideas and opinions. And so, we're not trying to canvas our clients to go a certain direction all the time. It's more of, okay, how would you like to pursue, or how would you like to look at this, and then how would you like to pursue it? And it's our job to go out there and find the best groups and best partners to do that for our clients. And so, from a thesis standpoint, even just taking a step back and thinking about digital assets, we had discussions a few years ago about, if we were to do this, how would we bucket it, right? Where would you place it? Because it is a completely new, different, distinct, nascent still asset class, especially when you compare it to equities and fixed income and even other alternative asset classes. And so for us, it was about, okay, one, find a place where we can bucket this, but then two, how are you going to access it? And so we really canvassed across groups that focus on Bitcoin, groups that focus on other digital assets, and then really, trying to find, to your point earlier, options that fit clients specifically for what they're trying to do. And I think my opinion related to Bitcoin is it's a scarce asset, and it's scarce because it can have a 21 million supply that is enforced by a decentralized group of participants that run the Bitcoin blockchain. And so the same I just said, I think all of us on this call would agree, but that's something that we would then discuss internally with other groups and with other individuals at Canterbury. And so it's one, having a thesis, doing some of the work, but then getting together as a group and then discussing some of these merits and considerations.
Yeah, that's awesome. I think for me, and I mentioned this in last week's, when you recognize the scarcity component of Bitcoin and you start to really evaluate the monetary policy of Bitcoin, all of a sudden everything starts to really click. And so that rings true with me. I'm curious about return characteristics and volatility, and maybe there's a lot of people that believe that volatility is a feature and not a bug. But that being said, I'd love to kind of hear your impression of the return characteristics and the merits from that standpoint.
No, I mean, the work that we've done, and there's a lot of other studies out there that show this. Even if you have a very small position in Bitcoin, 1-2%, it has historically moved the needle on your risk-adjusted returns to the upside. And I think with volatility, that is something that we get in terms of consideration. But at the end of the day, it comes down to portfolio sizing and how to think about managing that volatility within the context of a fully diversified portfolio. And so it's interesting, right? Because you have this asset that has historically been one of the better performing assets, over the last 10 to 14 years. But the volatility has also been very, very high. But then at the end of the day, you look at the Sharpe ratio or the risk adjusted type of return that you're getting, and it's still very, very attractive. So it all comes down to how you size and how you position it. And then also just really at the end of the day, setting expectations and making sure that we're covering all of the risk factors with our clients on Bitcoin, right? There are numerous risk factors and volatility is one of them. And I think it's a matter of making sure that is very explicit when we're having conversations with clients and also explicit when we're discussing this internally.
So
Yeah.
Rich, can I jump in for a second
Yeah,
here on
please.
a couple of points? Loren, you kicked this off talking about being curious, and it's great because we all say things like we want to work in a place that's forward thinking, yet preserves capital, and trying to balance those two aspects about, the leading bleeding edge so you don't miss the next opportunity versus, preservation of capital, which is one of the larger, not for your firm, maybe not, not in particular to your firm, but most asset managers. There was, to change it, to make an analog to another period, another active manager versus the firm like yours. In the 90s, I worked with a firm called Dawson Sandberg as a salesman. And so they were very big into tech. And one of their key features was that they had this very large fund called the Scout Fund. And they had this very unique PM who was just could look at a lot of factors at once. I think there were hundreds of names in the portfolio. But he would size the opportunities, look for trends, and it was basically his fishing pond. And it was a fishing pond for the principals of the firm, and he would bring things in and manage them. It was one of the better performing funds of the entire firm, but they couldn't scale it because the opportunities were so small. So when we look at that analog to one of the more successful tech firms from the 90s, looking at new opportunities in an evolving asset class or an evolving industry, tech-related, internet-related, when you say curious, what are some of the processes that you, Loren in particular, or the firm engage in to make sure that that curiosity is being fed?
That's a good question, Mark. It's really a cultural thing, and that's one of the reasons why I've really enjoyed being at Canterbury, and I've been with the firm for now over 11 years, and it's the fact that we have, as a firm, this natural curiosity to learn and to get better at what we do and provide the best type of service we can for our clients. And I think it's having the mentality of a yes and. So yes, let's look into Bitcoin, and then what should we do to make sure that we're doing it the right way and analyzing it in the most pure form, versus no, this is too volatile. No, this is a nascent funny money, magic internet money facade. So I think it starts from the very, very beginning of saying, this is interesting. Let's look at it. It may not lead to anything, right? It may not lead to clients allocating. It may not produce any sort of defined outcome. But I think it's our job as a consultant to have a curiosity, be open to new ideas, because that's, to your point, Mark, you need to be early on some of these things to really, potentially enjoy the fruits of that investment. And if you have this no mentality at the start, you're just never going to get there. And so, bringing that all back, we're in the job in the market of finding best solutions for our clients to produce the best types of risk adjusted returns and meet their outcomes of what they're trying to do as an organization. We're their investment arm, and it's up to us to make sure that we're doing that in the most appropriate way. And you need to have a very open mind to really do this job, this role.
Loren, one of the more authentic answers, and for the people listening, we've only spent a few minutes prepping for this call. Everything's live. How many people, Rich Kerr, have you heard in our field say yes and, which is a very nuanced way of approaching something? It means that I have to have the temerity to be wrong, the temerity to not have everything line up to my existing protocol or my existing process in my firm, not have all the answers. But over time, that type of approach is part and parcel to an open mind, someone that does bring it. Just love the fact that you answer the question by stating it comes with a mindset, and then it goes to our process at the firm. Great. Thanks, Loren, for that.
Absolutely. And
Yeah.
I think it relates to just on a personal level, right? I would, say all three of us on a personal level probably took an attraction to Bitcoin because we had this yes and mentality of, okay, there's something here. Let me look into it. Let me do my own research and figure out what's here. And maybe it's nothing, but the fact that we're on this call, I think we maybe, at least personally, my opinion, we think that there's potentially something here.
Yeah, it certainly rings true with me, right? I think we were all three of us, came from a traditional finance background in slightly different roles and spaces, and it's that intellectual curiosity that really helps tremendously, right? It's the way that we connect with clients. It's also the way that we evaluate our processes to support and do well by our clients. And so, no doubt about it, Loren, I loved hearing your response there. So, maybe this is a good point in time for a little disclaimer, because we obviously are talking about Bitcoin, and I think it's important to always highlight that whether you're an investment professional and or not an investment professional and tuning into this live feed, it's important that you do your own research, and nothing that we're speaking of here is construed as an investment recommendation for you. Everybody needs to have those conversations with their own financial advisor and evaluate whether or not it's right for you as an individual and or as a firm. And so we're here just kind of building our strength and understanding around Bitcoin, how it integrates into financial services firms, much like Canterbury, but also how it ultimately falls into the portfolio. Thank you for letting me just take a little aside. So, Mark, what other things are you curious about as we sit here and have a conversation with Loren about his process and maybe the broader Canterbury approach?
So thanks for that, Rich. As Rich said, we all come from different backgrounds, and mine was more on the hedge fund and institutional side. As a hedge fund manager for a short period of time, but more as a chief risk officer at several hedge funds. And then as a strategist, speaking to funds from the platform of a bank that no longer exists, which speaks to the growing fragility of the banking system. So I bring that up as a launching point, because Loren, when you're speaking to people, it's hard to change process and say, hey, if you're, if you only understand English, I'm going to send you a message in, Greek or Spanish, and maybe you can't take it on. So I heard you talk about Sharpe and Sortino ratios. When you approach Bitcoin with clients, or even at an investment policy committee internally, what's on the paper? Just assuming it's going to start with a report and then you'll discuss to it. Is it numbers? Is it a fundamental view? What is the best way to, I'll call, create that attachment or that engagement with someone for the first time?
Yeah, no, it's really a wide range of things, and maybe from an internal perspective, you always hear, right, the institutions are looking into this asset class, right? They're doing their due diligence, they're putting in the work. What does that entail, right? What actually goes on? And really, it's a really iterative process where it's a process that can take months to even over a year. Like I said, we started our internal working group 4 years ago, and so we have monthly or every other month committee meetings where we all get into a room or a Zoom, and we'll prep certain materials that either talk about a given manager that's in the space or just the asset class in general, and then it's a mix of things, right? It's looking at historical performance, risk. It's bringing in thought experts and having them talk to our committees and give their viewpoints, and making sure we get a diverse group of people coming in and hearing different types of views as well. I think that's really important. And then it's just having those frank discussions at the committee level of, what are the merits, what are the considerations, is there anything that we're missing, and then going back and forth with other thought experts out there and kind of getting more and more granular as you go. And so it does take a while. There's, at the end of the day, it's a committee process, right? So you need to get buy-in from a lot of different types of stakeholders and people within the organization, and people are at different levels of their education with Bitcoin or with any other asset class. And so it's just a time thing where it's like you're trying to get an internal consensus within your organization. And it's very different from on the personal level, right? Like Rich, Mark, we can do our own research on Bitcoin and figure out what we want to do for our own personal stakes. But from a institutional side, when you're trying to get consensus and also from a fiduciary mindset of this is potentially going into client portfolios, it just needs to be more thought out and more formalized.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Yeah, it's such a great point. It's interesting. You were talking about the due diligence process, and it may take months or it might take upwards of a year. Oddly enough, I had a conversation with a very large firm earlier or about a week ago today. And that being said, they have been developing a thesis since 2021, where and it's very deep, right? Like they're going along the process and they're exploring the right things and they're bringing the right materials forward to educate the investment committee. But they still haven't arrived at that decision. And part of that, right, is you've got different generations that live inside of a large firm, right? You may have a principal that is, has had and built tremendous success, doing things traditionally and within their ethos and their investment philosophy. And this is something so new right? It's a new asset class. It is something, although it now has 15 years of track record, but it is a new asset class that requires a different way of thinking. And so it's fascinating to me to watch how you have, research analysts or portfolio managers or whatever inside of a firm that have really strong conviction around Bitcoin. And then yet you still have to be able to make certain that everybody arrives at that same place in order to have the conviction and put the firm's name forward in front of clients with the idea.
Yeah, well, even just fully understanding the risks and the opportunities, right?
Yeah.
You don't necessarily need to be an expert in it to get that, but you do need to make sure that you fully understand what those risks and opportunities are very, very explicitly and everyone across the organization understands that as well. And then I would just say, right, we're covering all asset classes: equity, fixed income, alternatives. And so just from a time allocation perspective, everyone's very, very busy, right? Our consultants are working directly with their clients on different parts of their portfolio. Us on research are evaluating different types of asset class and strategies consistently. And so just from a time perspective, I'm sure other groups out there have a similar story where it's just, you got to split up your time, and there's only so many hours in a day to cover the whole investment universe. So these things just take time.
Yeah, no doubt. No doubt. It's interesting, though. It certainly feels like things are picking up steam. I think there's been tremendous curiosity about, what is Bitcoin? How do I integrate it? Do my clients need it? How do we address the most common question when a client is curious about, inflation or the debasement of their currency or whatever geopolitical matters that are causing them a degree of uncomfort or confusion, one or the other. And so Bitcoin seems to be a possibility that kind of steps in and gives people confidence that they're at least insulated in some way, shape, or form. So we're seeing a lot more curiosity on the Onramp side from all sorts of institutions, whether that be investment consultants, advisors, family offices, certainly, and even pensions. And so it's fascinating to watch that groundswell of curiosity kind of build, and I'm excited to see how that plays out.
No, I think that's right. We've seen something similar internally at Canterbury. Like I mentioned, we initially started looking back, 2017, 2018 during that cycle. And then, we've effectively gone, most people within our industry have now seen, at least 2 cycles of Bitcoin, the ups and downs and the volatility and all that. I think the fact that it's still here and it's continuing to gain mind share and market share. To your point, Rich, I agree. I think there's just continuing curiosity to really dig in now and do more detailed work and look at this more closely.
So Loren, Rich asked you about about the clients and digging in to Bitcoin for its own merits. Are you seeing anyone get curious about what's going on in the treasury market? It's last 4 years, it's down 3% annualized. I think over the last 3 or 4 years. About changes in, is private debt the right place to go if there's no transparency or little transparency on the underlying or history, late stage cycle, credit risk? Yeah, are people? Because there's 2 things. I ran to Bitcoin because I was running away from the other stuff that I was seeing. That's why I picked the book up, because I saw the pathway narrowing, and I didn't run to it. I ran from the other side. And are you seeing people still kind of clipping coupons, not worried, and then getting slowly curious, or are they concerned about purchasing power for their client portfolios going forward? That's a leading question, in case you couldn't tell there.
No, I would say opinions vary across our client base, and even with the groups that we partner with at a strategy level. And it's interesting, right? Because I think if you were to ask a a fixed income manager, right? They're going to have very different views on fiscal deficits and the look forward basis for fixed income returns and where all that goes, right? Versus talking with the Bitcoin manager, right? They're going to have a very different view on where inflation is and the value of the dollar going forward. And so it's really, as a consultant, it's taking in all of those viewpoints and making sure that those are conveyed to our clients, and trying to come up with the best diversified portfolio that at the end of the day can fit in a lot of different types of macro scenarios. And to be clear, we're not in the business of trying to forecast where the macro goes. Very, very difficult to do. We're in the business of building diversified portfolios across a lot of different asset classes and working with the best partners and thought experts out there. And to my point earlier, being open to different ideas. So no, I mean, that's how we view it. Really just making sure that we're open to all different types of opinions and viewpoints from the macro perspective.
Yeah. And you mentioned, that your investment consultants are out there having these conversations with clients, and you survey a wide set of clients, the high net worth, ultra high net worth, individual, family office, endowment, foundation, right? All different sets. Do you see one area or client segment that seems to be more curious about the asset and the inclusion of the asset in their portfolios over another? And I don't know whether or not you have that data or information in your role, but I'd be curious.
Yeah, I mean, just anecdotally, it seems to be more from the family side, where we've had a lot of more of the inbound interest in Bitcoin and digital assets in general. But that's not to say that we haven't had some inbound interest from the E&F side too. That has, I would say, has picked up a little bit more as of late in terms of inbound interest or just questions from those types of clients. And so, yeah, and I don't know if that has to do just with how clients are structured or kind of what their internal processes are themselves, but that's really been where we've seen at least inbound interest to date is more family oriented. But no, I think to your point, right? We saw news of big pensions allocating a small percentage to Bitcoin, and there seems to be some sort of newsreel every month now of some other large organization really kicking the tires on the asset and doing the deep dive. So and that my opinion, that's to be expected as you see the asset continue to grow and be more formalized. ETFs, I think, have had a large part of that too. Those being approved in January, February, earlier this year. That has really institutionalized the asset class. And then you have big groups out there that are actively promoting it and have their own products around it. And so that all gives more and more credibility to Bitcoin.
Oh, that's very helpful, and it makes sense, right? I mean, if you think about the origins of Bitcoin, it felt like everything was coming grassroots up versus being driven by banks and Wall Street, from its beginnings. And so stands to reason that curiosity is certainly there. But I do agree, the curiosity of institutions, especially once we saw SWIB make their announcement in May with their allocation, and while albeit a small allocation, a very sizable allocation in dollar terms. And so that being said, it's got a lot of people paying attention and saying, okay, well, how asking the questions that you're sharing with the audience today on, how do I do this? How do I do it smartly? How do I do it within my fiduciary responsibility and ensure that I'm vetting all sources of ways to access Bitcoin in a portfolio or other assets in the crypto space, I suppose.
Everybody should have a co-host like Rich Kerr, because you just brought it full circle back to my point about Dawson Sandberg with the Scout Fund. Now, SWIB is a successful 9th largest pension fund. They have a setup that interfaces with Wall Street. And what what they did was a scout fund. They put 0.1% in. They said, let's see how you swim with the rest of the fishies in our portfolio. And that's exactly what they did, to Loren's point about being curious. They did the work. They're not wed to it. They're dating it. And that's exactly, from the allocation standpoint, they've done enough to say, let's go. And that'll definitely be, and we are watching the Edgar filings on that position up and down to see how it passes muster within SWIB.
Yeah.
Good point you brought up, Rich. Bitcoin is one of the, at least from my experience, one of the few asset classes where it really came from this grassroots bottom up versus top down Wall Street. And when we did our initial work, it was more from the curiosity point of this is interesting, this is different. It wasn't because some firm came in and said, hey, you should really look into this. We have a product that we think may fit with your client. It was more of grassroots. This is interesting. Let's do the work. And now you're starting to see groups like yourselves, come in and provide really good institutional quality solutions for clients. Or typically it's the other way around, right? You get the product first, and then you kind of see how it fits. This asset class is interesting from the bottom up grassroots. Now the products are starting to come.
Yeah, no doubt about it. And I think that that's the right way, to be honest with you, because it gets people into the space of asking questions of the asset and really learning, what it is, how it operates, how it fits into the overall schema, and more importantly, the global situation that we're in. And so I think it's a fascinating time to be alive and to get intellectually curious about everything that's coming down the pike. And Bitcoin just seems to have hit at the very right time for the world, in my opinion. But that being said, I know we're closing in on our time. Loren, any closing thoughts or perspectives that you think our audience might benefit from that you'd like to share?
No, I mean, thank you both for having me. It was great to be on. I would just say that, if you're evaluating Bitcoin or really any new emerging asset class, just keep an open mind and ask questions. And I think that's really how you get down to making a decision for yourself or for your clients is asking a lot of questions, asking the opinions of a lot of different types of people out there, and then coming to your own conclusion. But the only way you do that is if you have an open mind, you have this curiosity to want to take in that information. So, to your point, Rich, Bitcoin's been around for 15 years, but it is still somewhat new for the traditional finance world and investment advisory industry. And so, I would just say just keep an open mind as you're doing your own work on the asset.
Yeah, and there's so many great partners out there that are eager to help you formulate an opinion and get the right resources to be able to formulate your own opinion, and that's really the critical piece of the equation. Loren kind of gave us some insights into Canterbury's culture, which is that intellectual curiosity. Just get curious about something and ask the questions and allow for competing ideas to be in the room. And, I think that that's a winning, culture, in my opinion. And so think about your own culture as an RIA or investment consultant or whatever you might be, how it fits in. And I think you'll, if nothing else, be able to answer questions that clients bring to you in a really competent way. So do the work, right? Get curious. And maybe one last thought, Mark. Anything that we should be paying attention to this week? I know we've got Bitcoin Nashville, which in 2024, which is Loren's backyard. So he's going to be hosting a lot of people, I'm sure. He's like, no way, nobody's getting in my house.
It'll be fun. But if anybody's out here in Nashville during the conference, happy to meet and grab a coffee or just meet up. But it will be a pretty entertaining, wild, but I think very impactful week in Nashville.
Yeah, no doubt. And we've got rumors of Elon Musk landing in Nashville. Who knows whether or not he becomes a speaker, but Donald Trump is certainly going to be speaking, and all sorts of speculation on what he might be talking about. I've seen things as crazy crazy, maybe for the broader public, not so much for me, but I would talking about a potential backing of a Treasury Reserve asset. Mark, any thoughts there on what we might see on that front?
Yeah, we always like to insert a movie quote here,
Mm.
Rich and Loren. So I would go back to Rocky 3, and the Clubber Lang's prediction for the fight was pain. And I would say that my prediction for the presidential election is not pain, but printing. Whoever comes in is going to be spending, regardless of party or person. And if anyone has access to the 10-year, go look at what happened the day after Trump was elected to the 10-year on November 9th, the day after the election. The rate spiked like a 99.9 percentile move higher through 2%. And I don't know if it came back down again. So twin deficit Trump in 2016 probably won't be any different than what the Democrats had been doing. And we have data on that to share. This is not political. This is an investment in macro call, trying to frame what's going on in the broader world, and then bring on guests like Loren to say, how is that information being onboarded? So I'll leave it with that, Rich, to say, look through the noise of what they're saying and go to the policy, and then look at the numbers. Look at M2, look at debt, and then look at the market.
Standing. Thank you for those closing words, Mark. We appreciate it. Loren, we are so grateful that you took the time to join us today and share some of your thoughts. We may have you back again and press the conversation at some point down the road. But in the meantime, thank you for hosting the 25 to 50,000 people that are going to be coming into Nashville. We're thrilled that you're there in the epicenter and welcoming everybody at the airport with cowboy hats and other fun things, right?
Yeah,
Cowboy hats and boots. Yeah.
and we'll be there too, Loren, front and center. We'll see you.
Yeah. No, looking forward to it. And Rich, Mark, thank you for having me on. This was a fantastic discussion. Really enjoyed it, and look forward to continuing our conversations as well.
Great.
Cheers. Thanks, Loren. Thanks, Rich.
Cheers. Thank you.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.